which zones to look for an entry point, and in which to skip a suitable candle. Look at this red candle. Most traders see bearish sentiment, right? But following SMC principles, we look at where it closes, far above the 50% midpoint. Institutional players see this as a positive candle. Buyers controlled the situation despite the red color. They pushed the price up and maintained their positions. Now, check this green one. Looks bullish, but it closed in the lower half. This is a negative candle. Sellers dominated, pushing the price down. The green color is misleading, but the internal structure reveals the truth. Don't just look at the color. Draw a line at 50% between high and low, and remember which way the candle is structured. Closing above 50%, positive candle regardless of color. Closing below 50%, negative candle, even if it's green. The closing price always tells the truth. But here's what's critically important. Never trade based on this condition alone. First, find a zone where price might react. Then use the template to confirm that institutions are actually responding. When you see all conditions at the expected level, it means the big players are on your side. So, which zones should we focus on when trading? Let me show you something game-changing. If you know how institutional players capture liquidity, you know exactly which zone to look for entry points. See this double bottom? Most traders think, support will hold. Price tested this level twice and couldn't break through. Then they go long. What do we see? A liquidity trap ready to spring. Don't immediately trade on a double bottom, let's observe. Smart money thinks differently. They don't respect support levels. They hunt them. When large players need to enter a long position with huge volume, where do they go? Right where retail traders have their stop losses or are entering shorts. Below this, double bottom lies a gold mine of liquidity. These patterns repeat everywhere. Double tops, triple bottoms, daily and weekly highs, extremes of European or Asian sessions. These are common and obvious patterns where liquidity is most predictable. Watch what happens when price breaks through this double bottom. This downward spike isn't a natural price movement, but an institutional trap. Smart money triggers every stop loss, grabs all the liquidity, then instantly returns price back up. Retail traders get burned while the big players fill their positions at perfect prices. Now let's switch to 5-minute charts for precise timing. Find patterns on 15-minute charts, execute on 5-minute charts. Here's the perfect formula. Here's our entry candle after the liquidity sweep. It meets all conditions. Positive candle, closes well above 50%, regardless of color. Delta shows plunged to 51, buyers